and you're watching Targets in Focus, where we analyse the performance of three currency pairs. Today I'll be discussing the cable, the euro against the greenback and the Aussie dollar with Anders Söderberg, Chief Technical Analyst at SEB in Stockholm. So first of all, Anders, let's begin with the cable. UK retail sales for September rose 0.6%, beating forecasts for a 0.4% increase. Also on Wednesday, the UK revealed better than anticipated employment figures. Now, how have these results influenced the performance of this pair?
Well, we was a little bit surprised actually this week. We had actually been looking for a weaker sterling for quite some time, given the economic situation in Great Britain. But we had some little bit of a better data, string of better data this week with retail sales, probably underpinned a bit by the Olympics in August, which is in the figures, and we also saw unemployment figures that were better than expected, and youth unemployment dropped substantially, even though it's a lot of the works are part-time works, but nevertheless, we're talking recession in Great Britain, and still, we have job creations. It doesn't really match up here. But we had a quite sharp sell-off yesterday, and to me that strongly indicates that we will see more selling here near term, and our recommendation for today is to seek a short position in cable in the 160.70, 160.80 area. So we could edge a little bit higher from here, but we think we will turn lower again. So we're probably ending today slightly lower from where we are now in the 160.30, 160.40 area. So slightly higher and then drifting lower again by the end of today, and then I think we're actually continuing lower for next week in cable as well here. So I think that is probably at the moment the most interesting of these three pairs.
And now let's move on to the euro against the US dollar. How do you think the euro against the US dollar will be performing by the end of the trading day today, and what is your outlook for this pair?
What we've seen is a little bit of weakness in euro-dollar emerging over the past 24 hours, and I think we probably will be ending on a slightly negative footing for today. So I'm looking for a move down towards the 130 handle on euro-dollar here, and I also think it's quite interesting to see that otherwise positive news coming out, like the 4-year Italian bond auction today that was successful, the banking union that is going forward within the EU summit. It seems that the market is not really taking into account those positive news, and we're actually seeing kind of a divergence at the moment where actually the euro is drifting south, whereas we're getting a little bit of a better news. And it's also quite stunning. A key driver for this euro-dollar rally has been the rally in especially Spanish bonds, and as we see, Spanish bond yields continues lower, but this time euro-dollar does not respond to it. And our forecasts going forward here is that we have the 1 month prognosis of the euro at 131, 3 months is 132, and then a drop down towards 125 in 1 year's time here. So we think that the euro-dollar is probably quite range bound for the latter part of the autumn, and we think focus will turn a lot to the US presidential election here going forward. So it will be a bit of a tug of war between the dollar and the euro here, and that means that we think we will be relatively stable.
Also, can you tell me how the Aussie dollar against the US dollar is trading today, and what are the key factors to watch out for that may influence the performance of this pair?
For today, I think we will probably be ending relatively unchanged. We've seen a little bit of selling of the Aussie dollar over the past day or so, with the market with the tendency of peaking out towards the 104 area here. Going forward, I think it's a very tricky question on the longer term basis, but because we have seen the Aussie dollar now been actually trading within a contracting range for more than a year, so we're basically locked in a broad range from 0.95 up towards 106. But our forecast is that we will see a slow and gradual slide towards par for the Aussie dollar. And the prognosis is 103 in 1 month, 101 in 3 months, and down to par, as said, in 1 year's time. And the key thing to watch out for going forward for Australia, I think, is one, of course, are the commodities universe, and in particular iron ore prices and coking coal as being very reliable indicators of the Chinese economy. And that is a key factor, of course, for Australia. And also the terms of trade is something worth looking into, where commodities, the exporting stuff from Australia has been cheaper, whereas importing stuff like energy has been coming a bit higher. So that has deteriorated. The other key factor, of course, is the Reserve Bank of Australia rate decision. And at the next meeting of the 6th of November, we do not expect any changes, but we do expect another cut early next year. And a decreasing short-term interest rate spread between the Australian dollar and the US dollar has historically been a very, very strong driving factor for the Australian dollar. So if this prognosis goes as we think, we should have a narrowing interest spread, and therefore we should also be looking for a slightly lower Australian dollar.
Thank you very much for sharing your targets with us today. That is all for right now, but don't forget to watch today's weekly wrap-up to gain insight into what moved and shaped the markets this week. Have a good weekend.